In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, is it a new era for Tesla? The company picks an insider to replace Elon Musk as chair. Robin Denholm assumes the role. Is she right for the job? Plus, Google's employees took to the streets demanding the company clean up its act when it comes to sexual harassment. Now, Google is dramatically reshaping how it handles complaints. Will it be enough to keep workers happy? And Lime is beefing up its C-suite with its first chief operating officer. He will join us here to discuss whether scooter sharing is really the next big thing. But first, to our top story, Tesla is appointing Robin Denholm to succeed Elon Musk as the company's chair. The move marks an end to the era of Musk's 14 years in the chairman's seat, although he will remain Tesla's CEO. Denholm will take over immediately, leaving her role as CFO of the Australian telecom Telstra. Joining us now to discuss this move, Nomura Instinet senior analyst Romit Shah. Also with us, Bloomberg Business Week's Max Chafkin. Max, tell us everything we need to know about Robin Denholm.
Well, so she's kind of an interesting choice because she's been on the board for a while, so she obviously has a relationship with Elon Musk and knows the company well. She also, she has a financial background, which I think some would argue be really good for Tesla, given the challenges that the company has had and will probably continue to have, sort of getting to profitability. And, she has a little bit of experience in the car industry, having worked in Toyota. So, it's not the most, I think some good governance people are probably not going to love this choice, but it does make sense in a bunch of different ways.
Elon has said that she was very helpful in helping Tesla become a profitable company. He tweeted, would like to thank Robin for joining the team. Great respect. Very much looking forward to working together. Romit, there's concern that she's not going to push back on Elon. She's been on the board for several years, and what he needs is somebody who will challenge him. What's your take?
I mean, I think, as far as like Elon's behavior goes, he's really the only one who has control over that. Having said that, I mean, Robin on paper looks like a solid pick. CFO. It sounds like this is a permanent role for her. So this is not a temporary chairmanship role. I think we'll probably see corporate governance improve. One area that I would like to see them improve is on their guidance practices, and hopefully with her in place, that happens.
Max, is it a permanent role, or will she hold this chairperson position just for the 3 years that Elon Musk has agreed with the SEC that he won't be in that job?
Well, no way of knowing. I mean, I think the bottom line is this is still Elon Musk's company. It would be very hard. It will be hard for even the most independent of chairperson to completely get him in line, because part of sort of what makes Tesla successful, what has made him successful, is the fact that he's sort of willing to sometimes break with the norms. So we don't know. I think in terms of if you were worried about him putting like a close friend on the board or somebody who would really have no shot of calling him out at times, then this is probably a pretty good choice. It definitely could have been somebody much closer to him than this. So in that sense, it's probably good news for investors.
I do want to take a look at the chart here in my GTV library showing Tesla's short interest. Over a quarter of shares have been borrowed to bet against the company. We know that this has been a pain point for Musk. He is not particularly fond of short sellers. Romit, do you think the short interest against Tesla will continue?
I think it's got to come down, especially after this print where, they generated a substantial profit in the quarter. Elon's behavior, I mean, to his credit, I think has been noticeably better since, they finished, the SEC investigation was completed and he paid his fine. Robin, who comes from Telstra, I think it is a permanent job. I mean, why else would you give up, a role as CFO to be the chairwoman for Tesla? So I think this goes beyond 3 years, and And so to me, it feels like the company's on the right track, and hopefully it continues.
So, Max, what else are we watching? Musk has said the company will be cash flow positive for every quarter to come, but it's certainly not going to be easy. He's talked about the workload. He's talked about the pressure. Is the pace that they're producing cars now, is that sustainable, without those feelings of sort of constant pressure and stress and strain on not just him, but the people who work at the company?
I mean, it seems like that things are improving. I mean, I don't think they're if you look at the numbers, I mean, they're not maybe quite as high as Tesla had wanted them to be, but it does feel like they've reached some kind of sustainable pace where they're manufacturing a lot of cars. The cost-cutting measures seem to have worked. I mean, the thing we don't know is, number one, what does demand look like, in the long run, and also, what does the sort of cost picture really look like long term? They seem to be kind of pulling out all the stops, both to try to generate a lot of demand, but also in terms of cutting unnecessary expenses. And the thing about a company like Tesla is it's not just selling this Model 3. It wants to develop a whole pipeline of cars, including a small SUV. So at some point it needs to start spending money and probably start borrowing money. And I think the goal here is to just put it in the best cash position so that if it does have to borrow money, it's going to get preferable terms.
Romit, what is your estimation of the longer-term demand and the longer-term cost picture?
I think the sky's the limit for the company. I mean, today they're run rating at about 350,000 cars per year. The market opportunity is 100 million units. Now you could say, well, it's a luxury car maker, but even then, Tesla is just a small fraction of a 10 million unit luxury car market. They've taken a tremendous amount of market share from some very solid car companies this year in Model 3. In fact, the share gains that they've shown in Model 3 so far mirror what they've been able to do with their premium sedan, the Model S. And they have, for a company that has done so well, they're just going to start selling their Model 3 in Europe and China. All of that's in front. And so I think there's a tremendous amount of room for the company to grow. And the question mark has always been around management and their ability to do better than what they say and limit the volatility in the stock. And it's been a tumultuous couple of quarters, but it seems like in the last month things have started to really improve for them on all fronts. So I'm optimistic.
There is competition, though, Romit. Other automakers are wising up and making alternatives to what Tesla is offering. He recently told Recode that he thinks Tesla will always be ahead in self-driving because it's a software problem and not a hardware problem. But would you agree that Tesla will always be ahead, or do they have to worry and think about the competition?
I think people take competition. They make a bigger deal of that than they should. I mean, look at Apple, who has had so much success with the iPhone. Apple is not the market share leader in smartphones. Samsung is. But Apple has been able to generate tremendous amount of value for their shareholders by being, by providing the best smartphone on the market. If Tesla can scale to 2 to 3 million electric vehicles per year, they probably won't be the market share leader in the long run, but I'm pretty sure that the stock and the value of the company will be significantly higher if they can get to that. I think what's important is what kind of profit can they generate for every vehicle they sold. And what we saw this last quarter is that the margin potential for the company, the margins for the company were a lot better than people realized, and if they could scale further, it's likely that the margins and the profits and the cash flow of the company are only going to get better.
All right. The question is, can they scale? A lot of cars. Nomura Instinet senior analyst Romit Shah, thanks so much. Thank you. Along with Bloomberg Businessweek's Max Chafkin. Max, you are sticking with me. We'll be back with you after this break. Coming up, Google makes a change after thousands of employees demand the company fix its sexual harassment policies. Google responds, but will it be enough? That's next. If you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Last week, thousands of Google employees walked out on the job protesting the company's handling of sexual misconduct, including massive payouts to execs accused of sexual harassment. The New York Times reported Google paid Android creator Andy Rubin $90 million to walk away quietly after credible accusations that he forced a subordinate into performing a sexual act. Well, Thursday, Google CEO Sundar Pichai pledged to make changes, saying that arbitration is now optional for these kinds of cases. He also vowed more clarity, writing to employees that, quote, going forward, we will provide more transparency on how we handle concerns, we'll give better support and care to the people who raise them, and we will double down on our commitment to be a representative, equitable, and respectful workplace. Joining me now from New York to discuss, we've got Bloomberg tech editor Alistair Barr still with us, Bloomberg's Max Chafkin. So, Alistair, this issue of arbitration has been a big sticking point for the industry. Susan Fowler has written to the Supreme Court to try to get some of these arbitration clauses removed. You know, what does it mean that Google is now giving employees the option to have these cases essentially dealt with in public rather than forcing them into private?
Yeah, it's going to get a lot of these things out into the spotlight, which big corporations don't like, and it's also going to increase the risk for the company. The arbitration clauses are all about large companies reducing risk because they can control the outcome better. If you hire a lawyer and take the company to court and file a lawsuit, it gets out of control very, very quickly. So it is a big move by Google, and Google is really a leader in Silicon Valley when it comes to a lot of these things. So it is a big step.
Well, it is something that Uber has done as well as Lyft. Max, the Google employees have a long list of demands. Is this going to be enough? Is this going to be enough to quell the discontent and anger about how Google has handled these cases over the years?
I mean, look, I think you have to say this is a good start. Having the ability to take the company to court gives employees with grievances like a huge amount of leverage. It's important to say there are other types of cases that I think are still going to be covered by the arbitration thing. It's not like they're saying you can take Google to court if you feel you've been discriminated against racially, for instance. So there's that. The other thing is kind of the culture of the company. I mean, one of the the Andy Rubin example is really bad, but there are kind of a lot of examples of basically senior executives dating subordinates, people who still work at the company, and I think like this sort of like overall cultural question is still needs to be resolved and probably won't be resolved anytime soon.
Right, and Google says it has rules around that. You're supposed to report any relationships to senior executives, But Alistair, it's really about, as Max mentioned, it's about a broader culture that has enabled this for so long, and can that change?
One of the telling changes that Google announced today seems quite small, but again, I think it's very important. So at work-related functions, managers are going to be encouraged. Well, going to have to discourage a lot of alcohol intake, and that really goes to Google's culture. Obviously, that there's no excuse for sexual harassment at all, but they're making this step because a lot of people who work at Google, they spend a lot of their time there, they do a lot of their socializing there, and back when it was a fast-growing, freewheeling startup, the company turned a blind eye to a lot of this stuff. So that to me was quite a good example of how Google is trying to change some things culturally for sure.
The footage of this walkout really stunning, happening around the world. I do want to talk about Google and real estate in New York, Max. The company is nearing a deal to buy or lease 1.3 million square feet of office space in New York. This would make room for an additional 8,000 or so employees. They're going to expand their Chelsea Market location as well, which means Google, could have 20-some thousand employees in New York. It's interesting because Amazon has gotten all this fanfare, out of opening potentially a headquarters in Long Island City that would, have enough room for 25,000 employees, but Google would be almost as big, essentially.
Yeah, it's very interesting, and there's been all this fanfare. You kind of alluded to it about subsidies, for Amazon and tax incentives, and it doesn't appear that Google, which is, as you say, employing kind of the similar number of people as Amazon in New York, is getting any kind of huge break for this. Although I guess it's possible. It just also shows like the extent to which Google is a media company. I mean, this is so much of what they do now is around ad sales, and obviously content moderation is a bigger thing. So I think it's a sign of that as much as anything.
So let's talk about that, Ali. What do we know about what kind of employees these new spaces will house? I mean, is it for Google's media efforts? Is it advertising?
I think they've broadened out a lot. Back in the day, they hired a lot of very talented software engineers, and they had a famous recruiting program that they'd put up code on a whiteboard, and you'd have to decipher it. Nowadays, they've really broadened their horizons, and they're looking for different talent. So I think a lot of it is going to be people who are coming out of business school, MBAs, things like that, who might go to Goldman Sachs or another big bank. That Google will be vying for those people in New York for sure.
Right. It's certainly going to ratchet up the competition, Max. Amazon's not going to have all of these, engineers and college graduates to itself. They're competing with Google and all companies in New York. Who's likely to win out? Who has the brand cachet in that competition?
I mean, this story around sexual harassment and many of these other, we haven't talked about China, we haven't talked about the controversies over Google's work with the Defense Department, but this is a company that is, really for the first time, I think, in its not super long life, is facing like serious brand issues, and that include those scandals. They're much of this is kind of taken on a political component, where you have conservatives kind of complaining that there's implicit bias, and Amazon, there has been a little bit of backlash over kind of its tactics in terms of getting subsidies, but you got to say that's a company where its brand cachet is pretty good now. I mean, people really trust Amazon. It's kind of avoided, at least so far, many of the kind of potholes and sort of thing that Google and Facebook and other big tech companies have run into lately.
All right. Well, we'll be watching. Max Chafkin, Alistair Barr in New York. Thank you both for weighing in. Coming up, Square rang up some impressive revenue in its third quarter. So why did Wall Street react unfavorably? We'll discuss. And Bloomberg Tech is live streaming on Twitter. Check us out at Technology. Be sure to follow our Global Breaking News Network TikTok on Twitter. This is Bloomberg. Square released its third quarter numbers Wednesday, and it looked pretty good from a revenue standpoint, with a 68% jump to $431 million. But with higher revenue came higher operating expenses, and the payments processor is projecting profits in the fourth quarter, falling short of estimates. As a result, the stock took a beating in early trading Thursday, dropping by as much as 9% at one point. Here to tell us what is behind these numbers, Bloomberg Tech's Selena Wang, who covers Square. So, Selena, what happened?
It's interesting because they beat expectations on almost every front except for this fourth quarter guidance for earnings. And what that shows is that earnings were good, but not good enough. This stock does have a premium valuation. It's increased more than 100% since the beginning of this year, despite the tech sell-off. So this is sort of showing that perhaps the growth that they saw this quarter doesn't live up to expectations. And now there is concern that the core business may be slowing a bit, and that operating expenses are rising a little bit too much as they're expanding into other product lines beyond the core payments processing business.
How much could this have to do with Square CFO Sarah Fryer's departure? She was very well respected.
Absolutely. I mean, there's already been a very negative response to her departure. The day after the announcement a few weeks ago, we saw the stock decline more than 10%. And Wall Street really credited her as being more than a normal CFO. They saw her as taking a lot of leadership responsibilities, as being a source of stability and growth, while the CEO has two jobs. He's running Twitter and Square. I mean, since she's joined, the company has expanded into several business lines. It's beat expectations almost every quarter, and she's done a really good job of guiding the street's expectations and serving as a marketing tool for the company as well.
Jack Dorsey is still running both Twitter and Square. You know, there are constant questions about, whether or not he can continue to do that and for how long. It's interesting because I've got this chart here in my GTV library that shows, both stocks have generally been up and to the right. Twitter has fallen over the last few months. There's been a lot of concerns about social media, misinformation. They've been doing that big account purge. But, a few years ago, who would have thought that Square's market cap would be bigger than Twitter's?
It is interesting to see Jack really come into himself and really be respected far more as a CEO, especially one of two companies. But overall, Twitter is a far more volatile business. It's in social media. It relies on an ad business. Square has had much more stability, and part of that is because he's been able to hire this executive bench that's done a really good job of being quite autonomous, even though he's running two companies. When I speak to sources inside the company, they say it's a huge loss that Sarah's gone. However, they do have a leader for each line of business. They have someone running Square Capital, running Square Cash, running the core business, running Caviar, the food delivery business. So even without a CFO there, in the interim, they're still able to run at a rapid clip.
Right. You certainly don't see the executive turnover at Square that we have seen forever at Twitter.
Absolutely not.
What is the progress on finding a new CFO?
So we know that the search is on. They talked about it on the earnings call, that they're very optimistic about who they can find. They have some high-profile people leading the search. Sarah Friar said herself, in her opinion, of course, she is biased, but she thinks it's the best CFO job in the world. And Square is a very high-profile company, and it may not be the hardest CFO job, given that it is really executing on all cylinders. So it probably won't be too difficult for them to find a lot of eager candidates.
All right, Talina Wang, Bloomberg Tech. Thank you so much for breaking it all down. Coming up, scooter sharing company Lime taps its first COO. We will catch up with investor turned operator Joe Kraus next. Plus, technology is constantly changing the nature of jobs and creating new ones. Those who don't understand that will be left behind. Educational toy company Little Bits wants to help. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Back to our top story. Elon Musk moving over as Tesla chair, appointing longtime board member Robin Denholm as chairwoman as the company continues to push for a dominant future in electric cars. Musk is, of course, no stranger to controversy or making bold requests of his companies or his staff, colonizing Mars, for example. But his latest gambit, seeking flexible term on a loan for SpaceX, was just too much for Musk's closest ally on Wall Street, which is Goldman Sachs. Joining us to explain what happened here, our finance reporter Lisa Lee in New York. So, Lisa, as I understand it, and as you reported, Goldman was shopping a $500 million loan for SpaceX, but now Bank of America is shopping that loan, which is a surprise, given Musk's close relationship with Goldman.
Yes.
What happened?
Yes, absolutely a surprise given the long relationship that Musk has had with Goldman, and also the very fact that one bank was leading a deal and then it switched over to another bank.
So what does this mean? What do we read into it?
What happened was that there was a term that Musk was seeking in Tesla loan. It's a $500 million loan, and they wanted a lot of flexibility and what kind of additional debt they could add on in the future without lender consent. And apparently Goldman balked, and they gave an opening for Bank of America to snag the deal away.
So, How else has Musk raised money? I mean, is this his only option for SpaceX?
Well, SpaceX is not the only option. There could be bonds that they could do, but this definitely the loan market is more privately held. And if you want to keep your financials close to you, the loan market is a great way to do this.
What is the interest? Are investors excited about this with these terms?
There's definite excitement about SpaceX. It's not the kind of loan that debt investors usually get to look at. They show that there is actually earnings, but if you look at the contracts, it appears that there is negative cash flow, but the pricing is pretty rich, and so there is a lot of interest.
All right, well, I know you'll continue to follow. Tell us what happens. Bloomberg's Lisa Lee in New York. Thanks so much.
Thank you.
Earlier this week, Lime announced it would name GV general partner Joe Kraus to be its first chief operating officer. Kraus has been a member of Lime's board of directors and was pivotal to GV's investment in Lime's $335 million fundraising round earlier this year. While Kraus takes on this new role at Lime, he will technically continue to be a partner at GV. Joe Kraus joins me now here in the studio. You're not going to continue to make new investments at GV, though.
Right, I'm just
because this
monitoring
sounds like
some
a
of
more than full-time job.
100%. You can't do a startup, certainly one at global scale like Lime is, without being 100% committed.
So you say that, you know, Lime isn't just about scooters, it's about changing the broader transportation landscape. What do you mean by that?
I think what we're witnessing as a society is something that I would call the great unbundling of the car. So for 100 years, the model of all cities has been you own a car and you do everything with it. You do short trips, long trips, trips to the grocery store, trips to the mountains. You own a car, you do everything with it. But the ride-sharing companies and the rise of mobile phones and smartphones really demonstrated something, which is you can get a vehicle at the click of a button in a moment's notice. And what I think we're witnessing is the unbundling of the car. So you are now going to be able to get the right vehicle at the right time at the click of a button. And micromobility, these trips of roughly 3 miles or less, are a key component of that.
Well, what does that mean for Lime? I mean, I know they don't do just scooters, but what is the vision for how Lime fits in given the competition?
Well, what's very clear right now is that there's a huge interest in this micromobility segment, with e-scooters being the primary form factor. So just look at Lime's growth. The company already in its very short history has done 20 million trips. We're operating in 125 markets globally, and we're adding 5 markets a week. People are riding scooters incessantly until they're basically in the ground. And the reason is, the scooter's in the ground, just to be clear. And the reason is that basically it gets you where you want to go much faster in a short period of time. In a short range. And so that's what we're seeing in every city. And what they're often doing is they're combining it with some other form of public transit. They'll ride a Lime scooter to the train station, take the train into the city, and then ride a Lime scooter to their final destination, and then reverse that when they're heading home.
So do you see Lime expanding beyond scooters?
Yes, I think there is definitely big vision that Lime has, which is ultimately getting you the right electric vehicle for the right trip at the right time. Now, where we're starting is in this 3 miles or less with e-bikes and e-scooters, primarily as the vehicle types, because that's what that is a hole in the market today. But I think there's definitely appetite for other types of electric vehicles as we move forward.
What about the pushback from cities, from residents who don't like the clutter, they don't look good, they've been thrown in the ocean, they've been set on fire?
Yeah, well, you definitely see people doing things on Instagram that they shouldn't be doing with a scooter or an e-bike. You know, my general view is that we're going to figure this out. We're in this phase where these companies, Lime in particular, has been offering scooters for less than 9 months. And in that time, going to 20 million rides in the last 9 months, there's an incredible appetite for this vehicle type. But we're going to figure out with cities how to roll it out effectively, with consumers how to have habits of where you ride it on the street, and how you separate traffic from scooters to increase safety. So there's a huge amount that we're figuring out, but the thing that is exceptionally clear is that people love these devices, and I have never, in 25 years of being in the technology business, seen anything growing faster than this company.
So you don't think it's like the next Segway? I mean, you hear people who are
No.
very skeptical, like this
100%.
is not going to be the next Uber.
No, this reminds me of, look, I started my first company on the internet in 1993. It was a search engine. And I remember the stories when Amazon started, when people were using credit cards online for the first time. Oh, there was all these complaints about like, oh, you know, your credit cards are going to get stolen. you're going to have a tremendous amount of fraud. Yeah, there's some of that as a problem, but now everybody assumes you can use your credit card online. I think the same thing is true right now. There's a lot of concern about how these vehicles are going to be integrated into city flows. We're going to figure this out, and the reason is people adore this type of transit, and we're going to work to figure out how to keep traffic separated and how to make them successful.
Was a criticism of the Segway. They were, didn't seem as great for women. There was nowhere to hang your purse, nowhere to hang groceries. Are just as many women riding these scooters as men?
Truthfully, I don't know what the demographic split is, but I will say that I think we're in a period of discovery. We're in a period of figuring out what's the right vehicle form factor. It is clear right now that scooters are the form factor that people love, these electric scooters. You can criticize them all you want, but people come off riding with a smile. And the data indicates that people will ride them again and again and again. But we're in a period of discovery. Should it be a 6-inch wheel, an 8-inch wheel, a 10-inch wheel? Should there be a handle for a purse? How do you make sure that should it have suspension or not? I think that in this period of discovery, we're working rapidly to figure out what the right vehicle type is.
There's been some concern that Lime's vision might be too big. I mean, that focus is good. How do you respond to that?
So Google has this great adage of 70-20-10. 70% of Google's time and treasure goes to the core business, 20% goes to immediately adjacent businesses, and 10% goes to moonshots. And I actually see from now that I'm going onto the inside that that's really how Lime is allocating its time and treasure. So what I've seen is there's tremendous, breathtaking ambition of what we can do as a company in terms of providing the right electric vehicle at the push of a button. But they are really following this 70-20-10 kind of allocation. 70% to the core business of e-scooters and e-bikes, 20% to the next adjacency of other electric form factors, and 10% into the moonshots.
Now, GV also invested in Uber back in the day, but it got awkward. Google was doing self-driving. Uber started doing self-driving. Google started doing a carpool service via Waze. Uber wasn't too happy about this. There was the whole Waymo lawsuit. How can we be sure that it won't get awkward like that, given the relationship there?
My general view is that Uber was a set of special circumstances. If you look at the 350 or so active investments that Google Ventures has, there's only been one conflict ever. It just happened to be in the highest profile investment that we had made. So I think the data would indicate that this is an extremely unlikely event.
Now, we've been covering the Google walkout and Google now making changes to the sexual harassment policies. I know that GV is financially independent from Google, but it's still the mothership, essentially. What's been the message at GV to employees?
The message has been consistent, which is essentially, universal respect and basic human decency and a zero tolerance policy has been the norm at GV and continually enforced. And so I don't think there's any change in that whatsoever.
Do you think that these changes will be enough to quell discontent, quell some of the anger out there?
I don't know, but I know that you cannot stop trying to improve things, even if, I don't know if any one thing is ever enough, but in the fullness of time with consistent effort, that is the way real change is made.
So for you, you're leaving I don't want to say a cushy job at GV, but you're leaving a stable job at GV to go be an operator at, exploding unicorn. Mm-hmm. Why did you decide to do this?
Well, the first reason is that in 25 years of being in the tech business, like I said, I've never seen anything grow like this, grow in terms of revenue, have this kind of product market fit, have immediate global scale and impact. And that's incredibly exciting. Like, the old model of venture was that when you went into venture after being an operator, so I was an operator for 15 years, you're hanging up your cleats, you're never getting back on the field. I think the new model of venture, if I look at Reid Hoffman at LinkedIn, if I look at Anil Bhusri at Greylock and Workday, if I look at Keith Raboy at Open Door and Khosla Ventures, this new model is to be more fluid between those two things, because I think it makes you better in all these cases. And truthfully, it's also back to the future. This is what venture did in the 70s and 80s.
Do you worry about a winter slowdown with scooters? I mean, it seems like it could certainly be seasonal. I mean, if there was snow and ice on the roads, it's not going to work.
Yeah, I mean, look, we have the business is so new in 9 months of operating on the scooter side. They have more history on the bike and e-bike side. But I think the expectation is, sure, of course, in the Northern Hemisphere, there's going to be some level of natural slowdown as you get inclement weather. Part of the reason you want to offer multiple vehicle types is that you can make up for some of that. And in addition, why you want to go into the Southern Hemisphere is so that you can have offsetting revenue and ride trips per day. Also remember that these vehicles are movable, so we can take fleets from the Northeast and move them into Latin America because this is a fixed asset business as opposed to a virtual fleet like in something like Uber.
That it's very intensive to do all of that transport.
100%.
There was just a recall on some of the scooters. When it comes to safety, how do you make sure that you can keep all this up and be profitable when a ride is only just a couple of bucks?
There is no denying that this is an operationally complicated business, but that is both a challenge and an opportunity. My general view is that when you have an operationally complicated business, knowing how to operate it effectively becomes a long-term barrier to entry because these are not easy businesses to run at global scale. Remember, this is a vertically integrated company. We design and manufacture all of our own vehicles. In addition, we then transport them. In addition, then we operate those fleets inside of any individual market. There is no denying it is complicated, but if you can do that effectively and efficiently, I think that gives you a real edge in terms of making a very profitable, on both the unit economic business and a corporate level entity, a very profitable enterprise.
All right, Joe Kraus, incoming COO at Lime. Thank you so much for sitting down with us. Appreciate it. Coming up, studies show that girls start losing interest in STEM as early as 8 years old. How the education startup Little Bits is using toys to change that. Plus, the ride-hailing rivalry is heating up in Southeast Asia, and Indonesia's Gojek could be leading the pack. We'll talk to the CEO. This is Bloomberg. Thursday is National STEM Day, a day meant to inspire kids to explore and pursue interests in science, technology, engineering, and math. Today, an estimated 2.4 million STEM-related jobs remain unfilled, and millions more are projected to open up in the next several years. Companies like Little Bits want to prepare today's kids for those careers. Little Bits makes what it calls electronic building blocks, a series of magnetic bits that snap together to create inventions like robots and musical instruments. Since 2011, the company has developed 9 different kits, raised more than $60 million, partnered with Disney, and now works with 20,000 schools across the country. Here to tell us more, founder and CEO Aya Badir. So Aya, thank you so much for joining us. I'm curious, what trends are you seeing in terms of how girls and boys respond to these kits?
So we see kids being very interested in STEM when they're younger. When they're early in elementary school, they're very interested, and then slowly they start losing interest between the age of 8 to 12. And by the time they reach high school, more than 75% of kids are no longer interested in STEM jobs and STEM fields. And so what we're trying to do is really capture them at that moment where their interest is still high and inspire them to continue pursuing these fields.
You say that girls start to lose interest after the age of 8 or so. Why is that?
It's a combination of social factors, stereotypes that they're sort of subjected to. A lot of media is sort of showing girls that are more interested in being beautiful, being social, being girly, as they call it. Also, we see a lot of parents and teachers are sometimes not supporting girls wanting to go into STEM fields. And so it's a combination of all those things, as well as not having enough role models to look up to, not having enough women in leadership positions, in STEM roles, women that are engineers or programmers or really sort of leading fields in science, makes it less and less attractive for young girls to pursue these careers.
You're partnering with schools. What can parents and teachers do at that early age to help, encourage interest in these kits, in STEM in general?
So the way our approach is that we have to make STEM fun. We can't talk to kids about this is important for your future, this is something that you must learn to be successful. They're not going to respond to that. What we try to do is we inject STEM in invention, in creation, in them expressing their interests. So we tell kids, would you like to make a sibling alarm or a robot or a wireless doorbell? And through those inventions that are interesting to them, they start to learn more about electronics, about technology. We also have an online community called DIY.org gojek.org, where kids are uploading projects, they're sharing passions that they have, they're commenting on each other's projects, and so we inspire kids to inspire each other and really support each other through those interests. So it's really a combination of making it more fun, making it social, making it more of a community activity, and in also many times empowering parents and teachers to join in on the fun as well.
You've partnered with Disney, you've raised a lot of money. How big do you think your business can be, and what are your plans to expand?
So we're at this very interesting intersection. We're a technology company, but we're also in education, and we also dip into educational toys. So we have this really kind of comfortable combination between three very large fields. And we're seeing interest in STEM toys and STEM products and educational products in general really expand. There's a lot more focus on schools integrating STEM and programming and coding and robotics into the classroom. There's huge grants, a lot of legislation that's been approved over the past couple of years to really support that. And so we're seeing it happen in the classroom in formal settings. We're also seeing it happen in informal settings and after school programs and maker spaces, libraries. And so we think this is a multi-billion-dollar business. It's why our investors are in it. It's why our investors are very aggressive about it, and we are as well. And we're really excited to be kind of leading this space.
All right. Good to hear more about the work you're doing. Littlebit's founder and CEO Aya Badir, thanks so much for stopping by. Still ahead, Indonesian ride-hailing company Gojek expects to raise $3 billion in fresh capital this year. Where the company is looking to expand next. This is Bloomberg. Southeast Asia is gearing up to be the next battlefield in the fight for ride-hailing dominance. Indonesia's most valuable tech startup Gojek has now launched a portal for Singapore drivers to pre-register for its platform, going head-to-head with Singapore-based Grab. This comes among reports that the company is in talks to raise at least $2 billion in funding to fuel expansion overseas. Bloomberg's Haslinda Amin sat down with Gojek CEO Nadiem Makarim at Bloomberg's New Economy Forum in Singapore to discuss.
In a tech startup, fundraising is kind of like a continuous project. And I can assure you that, on that front, I believe we are in a very favorable position in many ways. And not just the quality of, it's not just the quantity of the fundraising, but even more importantly is the quality of fundraising. As you can see from our shareholders, where you've got Google, you've got Tencent, you've got JD, you've got GIC, Temasek, and a variety of other heavy hitter financial institutions, you really see, and Meituan as well, you really see the world's best at all the key verticals that we are trying to execute on in order to create this, the first in the world of a kind of super app that actually encompasses all your daily transactional needs. And so the quality of the fundraising is, I think, that's going to really set this apart from anything else. But our funds will then be used to, of course, some of it will be used for international expansion. We're already at about 35% of the two-wheeler market in Vietnam already, after only like 2-3 months, which is incredible. We were shocked to see the uptake so quickly. So some of it will be that, but a lot of it will also be to expanding new verticals and further increasing the penetration of our services in Indonesia, which is the largest market where we are the market leader. And so I think that, despite the very intense competition, actually the saturation point of the consumers versus, say, China is still very small. There's still so much more to grow across transport, across food delivery, across payments, across logistics, across digital goods. And so I think that we're only scraping the surface of how big Gojek could actually be, because our mission is really, our addressable market is the entire middle class spend of Southeast Asia. So it's a really big pie that we need to attack. And so funding will facilitate that.
Might you need $2 billion? That's a number out there. Close, more, less?
I cannot comment on that.
When do you expect the next round, the funding round, to be completed?
I also cannot comment on that. All I can say is that it will be a sufficient amount in order for us to achieve our short-term and medium-term objectives.
Gojek CEO there, Nadiem Makarim, with Bloomberg's Haslinda Amin at Bloomberg's New Economy Forum in Singapore. Well, Tuesday's elections were a home run for Salesforce co-CEO Mark Benioff after San Francisco's passing of Prop C. Benioff was the #1 backer of the controversial homeless tax, which taxes some of the city's biggest corporations to provide funding for homeless services. Wednesday, he told Bloomberg that businesses can play an important role in making change.
There's really two ways to look at business. One is Milton Friedman's traditional kind of phrase, the business of business is business. The second way to look at business is the business of business is improving the state of the world. And I think in today's world, when you have the kind of crisis that we have, whether it's homelessness or the issues we have with our public schools, the issue we have with our public hospitals, business can be a huge place.
Other tech companies like Square and Stripe oppose the tax, saying it would tax them unfairly. And that does it for this edition of Bloomberg Technology. Be sure to tune in tomorrow for our interview with Symantec's CEO after those M&A reports. And Bloomberg Tech, live streaming on Twitter. You can check us out at Technology. And be sure to follow our Global Breaking News Network TikTok on Twitter. This is Bloomberg.